Whenever Bitcoin or crypto in general is crashing, whenever there's massive setbacks, I get all these questions, PMs on Twitter, on LinkedIn, on Facebook, on YouTube. Julian, what should I be doing? What are the right strategies right now? Let me give you 7 strategies that the pro investors use that you can also use and that, should kind of calm your nerves and get you prepared and actually not lose money, but maybe actually win money. So with this, have a lot of fun in today's video. Welcome to today's video. My name is Julian. On my channel, it's all about making you crypto fit. I discuss the beautiful world of blockchain, decentralization, cryptocurrencies, most of all Bitcoin. If you're new to the channel and you enjoy these topics, trust me, you want to subscribe to the channel. I do all this stuff for free, pretty much on a daily basis. I discuss current markets and give you updates and strategies. And hey, if you're recurring, welcome back. It's going to be a fun video today. And we're going to dive right in and we're going to talk about those 7 strategies. Strategy number 1 is, pretty much a no-brainer strategy. And it is the strategy, if you get scared when markets drop down, well, maybe you invested too much in the first place. Now, I get it. This is going to be something where you're like, duh, Julian, what a no-brainer. Trust me, many amateur investors, they see this black and white scenario constantly. For them, they have $10,000 on the sidelines. They go in $10,000. They don't doze. Whenever you look at professionals, right? You look at the institutions, high net worth individuals, they do way more gray stuff. They go in, they dollar cost average. They don't invest more than they can lose. These are all very general ideas. And if you actually do this, such setbacks, when the market drops, you're actually welcoming those because that just allows you to add additional capital to your stash. So I think that's the very first one before we go into some other strategies, but just keep this in mind. I think that's a really important mind here. And obviously, don't invest too much because of black swans. Black swans means there's events that are outside of 3 standard deviations, way too risky, and trust me, Bitcoin and crypto has possible black swans. As much and as bullish as I am, you have to be aware of this. So this is rule and lesson number 1 that all pros use. Lesson or rule number 2 that all professionals have. It's all about the right time horizon. Now, what do I mean with this? If you invest, for example, in Bitcoin, and you don't have at least 4 years of a time horizon, you probably are investing way too short term. Crypto, Bitcoin, most of the entire crypto cycle, you need to be investing with at least 4 years of time horizon. If you have been part of crypto for at least 4 years, so we're talking about right now, beginning of 2017, well, at least in Bitcoin, at least in ETH, most other coins as well probably, you should be in plus. And so even if the market is dipping, you shouldn't be nervous at all right now, right? So that's just something that's very important. Keep this in mind. Time horizon. I would never invest in a crypto project with like a week or a month. So if the markets fluctuate in there, I don't even look at those prices. And trust me, do you think the really large investors in Bitcoin, for example, the Michael Saylors, the large funds, do you really think they care about a 1-week basis? They don't invest hundreds of millions of dollars for 1 month. They invest this for years. If pros do this, you as an amateur that wants to be a pro should do the exact same thing. Very key. Third, before we go now into the strategies more and more is, the trend is your friend. I hear so often that when actually the long and midterm trends are very bullish and the market dips a little bit, I suddenly see people shorting the market. I see people buying put options. I see people completely exiting the market just to either be completely liquidated or not being able to catch the train anymore. You know how many people I know that when Bitcoin was going closer to 20,000 and then it went over like 22,000 who completely exited the market and said, you know what, Julian, the market's going to crash. Believe me, I know how to time this thing. I was just like, sure. Let's see. I see this for the next 4 years, right? I think in 4 years, Bitcoin is going to be way higher than today. And what did the market do? Well, depending on when you watch this video, beginning of January, Bitcoin was over 30,000, and there are people who exited at 22,000, and now they're sitting there, and I'm like, should I be buying in right now because the markets just keep running, and they're waiting for a 19,000 setback. Well, maybe this 19,000 setback is never coming. So the trend is your friend. You don't want to go against a trend. It's really, really, really difficult. So whenever you try to predict a crash, and actually all it does is, it's a short time setback. These are totally normal, right? It ties a bit in with the time horizon, but keep this in mind. This is key. Now, let's get into a couple of strategies. This is lesson number 4, and a lot of professionals do this. They look at anti-correlated investments. So they look at beta. What does this mean? Well, for example, I invest in Bitcoin. Then the amateur actually buys coins that just move with Bitcoin. They might move a bit stronger, a bit weaker, but at the end, they completely move with Bitcoin. That's what the amateur does. And the pros, they actually look and say, yeah, of course, there would be 2-3 other awesome coins. But you know what? I'm going to look at the correlation. I'm going to look at those coins that are completely anti-correlated. Now, here's the crazy part. Many times, these are coins that are not popular. Why are they not popular? Well, because they move anti-Bitcoin. So if Bitcoin goes up super a lot, and trust me, Bitcoin over the past 6 months has just known one direction, and that's up. Yeah, there were some small setbacks, but so these coins are not popular. But this is what the professionals then are buying. And so every once in a while, when Bitcoin drops by 20%, and suddenly you see these coins in the greens, well, check those coins out and see the correlations in there. If you look at the entire crypto market as a whole, there are ways how to structure your portfolio where when Bitcoin goes up, yeah, these investments are going down. But when Bitcoin goes down, these investments completely go up. And so it completely averages out. You're not maximizing your returns this way, but well, at the end of the day, and this is a key thing, for example, in March 2020, when the entire markets were crashing, if you had a really nicely diversified portfolio, your entire portfolio might have only been down 3 or 4%. Why? Well, very simple, because while Bitcoin was crashing, there are other investment asset classes that were completely pumping during this time. Why? Well, simple. If you suddenly had this deflationary shock away from most risk on assets, and I'm talking about Bitcoin, I'm talking about gold, stocks, there were other assets who completely pumped. So it kind of covered this drop. And trust me, most professionals understand that. They look at those things. They look at Sharpe ratios and look how assets are performing. Then they kind of weigh those volatilities against each other and the directions. And then they build this diversified portfolio. This is what professionals do. The amateurs, they go and they're like, you know what? I'm going to bet on this one horse. I'm going to go all in. My time horizon is 1 month. And if we drop by 5%, I totally panic and I exit. Right? So you don't want to be this. This brings me to point number 5, and that's actually now becoming a strategy, right? So now we're getting into a side of the portfolio stuff. We're going to go into a bit of strategy. Obviously, one way to completely protect yourself against crashing is if you short the market. Shorting means you borrow something and then sell it, and then you hope to buy it back later and return it to the person that you borrowed this from. For example, you could short Bitcoin. How do you do this? Well, most exchanges now, Kraken, Binance, Coinbase, I'm not sure if Coinbase, but Kraken, Binance, many exchanges allow you to short. You can even short with leverage. And that way you can completely protect yourself. So what you could do is, for example, you could go and say, you know what? I'm going to use, 5% of my portfolio. I'm going to short this part. I'm going to leverage this by 10 times, for example. And then if Bitcoin drops, well, your portfolio drops, but the short position covers that. If the portfolio goes in the other direction, yeah, it's completely going to eat up your short position. You're probably going to lose all your money there, but you're going to be net positive. The idea is always the same. You're not kind of maximize the results here. You're trying to kind of be on both sides of the trade. You have one direction that's the long side, but you're still covering the short side. So obviously Binance works, Kraken works. I'll link this up below so you can check this out, and you can just short. Basically, it means you borrow something, you have to pay a fee when you're borrowing, right? That's key. So that's actually where a lot of the lending returns are coming from. For example, when my company Cake, where you can get cash flow in your crypto, the way we make this is we exactly lend to those exchanges where then these traders can borrow from, right? So that's a key concept. Idea number 6 is put options. And in this case, we're talking about covered put options. They're not naked because I expect you to have the underlying asset. So you could go, for example, to Deribit and you buy put options on Bitcoin. So you could say, you know what, I'm going to buy a put option at 25,000, at 30,000. And if the price dips below this of Bitcoin, you're actually cashing in. And so you can actually do the math and you can work this out, how much of your portfolio goes in there. And you would see this more as an insurance, right? Just like, let's say you buy a house for, let's say, I don't know, $100,000, $200,000. Then you would buy an insurance on an annual basis. For example, you'd say, you know what, 1% of the value of the house I invest into an insurance. It might not cover the entire house if it burns down, if something happens, but it covers part of it. And so you could do the exact same thing with Bitcoin. The downside in comparison to shorting in the options is you have a deadline. And so by that time, if nothing happens, the insurance is worthless. Similar how you pay an annual premium to the insurance. And if you stop paying the insurance and nothing happened, well, you lost that money. But on the other hand, hopefully you made some nice returns because the asset went up. And I think that's a very, very, very important part. Now, again, many professionals actually mix those solutions, right? They're there, they don't invest everything, they dollar cost average in, they have a long time horizon, they understand trends your friend, they use portfolio strategies, they short, they long, and then they buy options, covered options on the underlying asset. And that way, doesn't matter what the market does. If the market goes up, they cash in heavily. If the market has a strong setback, it doesn't really hurt them much. And that brings me to number 7, and that is, most of the time, if you try to trade in and out, you're mostly late. So you need to apply these strategies at the beginning. You need to apply them up front. And then there's a couple of other things. Depending on your jurisdiction, if you go a lot in and out, you pay additional taxes. And it might actually be easier or better to kind of use some of the other strategies than going in and out all the time. So just keep this in mind whenever you kind of try to use all these trading strategies in protecting yourself from a crash. So yeah, I think that's really key. I'll link everything down below for you that you might want to need. If you like this stuff, you want to be updated, I'll discuss when there's crashes, I'll discuss when there's hype cycles. You can check out the videos, you can subscribe, you can follow. I hope you like this, give me a thumbs up, and yeah, then I'll see you around at the next video. With this, thanks so much, all the best, yours truly, Julian, bye-bye.